Hi friends, welcome to EduTap. So today we are going to discuss an interesting topic of accounting standards. Now this topic is very much theoretical. There is not much practical to learn about in this particular topic. So we are going to learn what are these accounting standards, who issues them in respect of companies and non-companies, and now what is the present scenario in context of the accounting standards. So let's start our today's discussion. So first question is accounting standards. Options are oral policy documents issued by the government, increase the accounting alternatives in the preparation of financial statements, deal with recognition, measurement and presentation of events and transactions in financial statements. All of the above are true or none of the above is true. So let's talk about accounting standards. Now these standards, they are there to harmonize the accounting practices across the country. Across the India, we want that accounting practices, they should be similar and not different. For example, if there is a case in which there is a company A Limited and this company it's valuing its stock at cost price, and there is a company B Limited, it is valuing its stock at market price. There is another company C Limited and this company is valuing its stock at cost or market price, whichever is lower. There may be another company which may value it at cost or market price, whichever is higher. Now there can be diverse set of accounting practices and we need to standardize those accounting practices. That's why there was a need for proper accounting standards in India. So that's why the Institute of Chartered Accountants of India, it has formulated these accounting standards on certain important aspects. Like there is an accounting standard on inventory valuation. So accounting standard 2 is there, which talks about how we have to value the inventory. It says that you have to follow cost or market price, whichever is lower. Similarly, there are accounting standards for how you have to record the fixed assets in your books of accounts. Similarly, there is an accounting standard of how you have to record the investments in the books of accounts. So there are different sets of accounting standards which are there to harmonize the accounting practices in the country so that the comparability can be ensured. The statements of A Limited, B Limited and C Limited can be easily compared by the investor. So that's why we have standardized, we have brought in proper standards for accounting. So accounting standards, they are written policy documents. So they are in writing, they are available to us in writing. Policy documents which are issued by the government, and the government is supported in this regard by other regulatory bodies, Ministry of Corporate Affairs, National Financial Reporting Authority, Institute of Chartered Accountants of India. There is another accounting standards board as well. So they are written policy documents and they cover different aspects of the accounting transactions or the events. They cover the recognition aspect, when you have to recognize a transaction, which transaction has to be recorded in books and which should not be recorded in the books. There is a measurement aspect, at what value do we record the transaction. There is presentation and disclosure aspect, how do you present this information in the form of financial statements, and what disclosures have to be made in the financial statements. Now accounting standards, they reduce the accounting alternatives. Now earlier there may be different sets of accounting alternatives. One may follow costing principle for valuing the inventory. Other one may follow market price and other one may follow cost or market price, whichever is lower. So we reduce these accounting alternatives and ensure comparability of the financial statements of the different enterprises. So now it's very easy to answer this question. They are not oral, they are written policy documents. They reduce the accounting alternatives, they decrease the accounting alternatives, and option C is correct because they deal with recognition, measurement and presentation of the events in financial statements. So answer is option number C. Now the next question is, Accounting Standards Board was constituted by Institute of Chartered Accountants of India in. Options are 1957, 1977, 1997, 2017 or 2021. Now this Accounting Standard Board has a very important role to play in the formulation of accounting standards in India. Now this board was set up in which year? We have to answer this. So let's learn about Accounting Standard Board. Now in India, there was this requirement of formulating the accounting standards. Now, Institute of Chartered Accountants of India, it played a key role in this regard and it constituted Accounting Standards Board in 1977. So this is the year in which this Accounting Standards Board was set up for formulating accounting standards in India. Now this Accounting Standard Board, it comprises of the representatives of the industries, association of industries like SOCAM, FICCI, etc., regulators, academicians, government departments, etc. Now how the accounting standards they were formulated by this board? Now this is very much similar to how we make movies in India. We copy the content from abroad, we copy the content from Hollywood and make a movie in India. So this is what we did in the case of accounting standards as well. We picked out the international accounting standards, international financial reporting standards, and considered them while framing the accounting standards in India. So in India, the situation was a bit different. And so we took the idea from the international standards and prepared standards as per the Indian scenario. So the accounting standards, they were issued gradually, and these accounting standards, they were gradually issued by the Institute of Chartered Accountants of India. So now you have to remember this thing, that there are two sets of entities which are there. One is the corporate entities. Corporate means companies are there, and other are the non-corporate entities. For non-corporate entities, Institute of Chartered Accountants of India issues the accounting standards, and for corporate entities, the accounting standards are issued by Ministry of Corporate Affairs in consultation with NFRA, National Financial Reporting Authority. The accounting standards, they are the same. But once they are formulated by ICAI, the Ministry of Corporate Affairs being the regulator for the companies, it considers these accounting standards, it makes some exemptions as well for small companies and issues these for applicability for the companies. So this is something you should remember. So now we can easily answer this question, that Accounting Standard Board, it was set up by ICAI in 1977. So clearly the answer is going to be option number B. Now here is the next question. How many accounting standards they have been issued so far by the Institute of Chartered Accountants of India? Options are 24, 29, 47, 51 or none of the above. So now we have to remember that Institute of Chartered Accountants of India, it has so far issued 29 accounting standards. So 29 accounting standards they have been issued by it. However, Accounting Standard 6 and 8, they are no more. Accounting Standard 8 has been replaced by Accounting Standard 26 on intangible assets. Accounting Standard 6, it dealt with the aspects of depreciation, and now this is merged with AS 10, which deals with fixed assets. So now AS 6 and AS 8, they are no more. So presently, in effect, we have 27 accounting standards. So issued are 29, but effective, they are only 27. Now the Companies Act, the companies, they had earlier notified the 28 accounting standards, but now after the denotification of the Accounting Standard 6, there are only 27 notified accounting standards for the companies as well. So in effect, we have 27 accounting standards for all the entities including companies, but 29, they were originally issued by Institute of Chartered Accountants of India. So this is something you have to remember. So here is a list of all the accounting standards that we have. So Accounting Standard 1, it deals with disclosure of accounting principles. Accounting Standard 2, it's very important, inventories. Accounting Standard 3, again very important, it deals with cash flow statement. And similarly, there is a list of all the accounting statements. Another important one is Accounting Standard 9, which deals with revenue recognition. Accounting Standard 10, it deals with fixed assets or property, plant and equipment. Accounting Standard 11 is with regard to the foreign exchange rates. 13 is for the investment, and there are different sets of accounting standards which are there. So you can have a look at this particular list of the different accounting standards that we are having. So now we can easily answer this question, that the Institute of Chartered Accountants of India has so far issued 29 accounting standards. So the answer is going to be option number B. Now moving on to the next question. Government of India, in consultation with the ICAI, decided to go for -IFRS issued by the IASB. Now IFRS, it is International Financial Reporting Standards. They are International Financial Reporting Standards, and IASB is the International Accounting Standards Board. Now, the government of India, it decided to go for options are convergence with IFRS, adoption of IFRS, total disregard of IFRS, challenging of IFRS, or none of the above. So this is what we have to answer. Now we have these international financial reporting standards, IFRS. Now the option for India was whether it should go for the adoption of the IFRS or not. If we have to make sure that the Indian companies, they go to the top, they should also follow the international accounting practices as well. So there was an increasing need of the adoption of the international financial reporting standards or international accounting standards. So that's why Government of India had to take a decision in this regard. So let's understand what decision was taken. Now these international financial reporting standards, as already explained to you, they are issued by the International Accounting Standard Board. Now these international standards, they are followed by multinational companies worldwide. Now any country, they can also adopt, any country can also adopt these IFRS. There are two options for it. One is adoption. One word we use here is adoption. And the second word we use is convergence. So there are two ways for following the IFRS. One is adoption and the second one is convergence. Adoption means that we set a timetable that by this particular time we would adopt the IFRS. We would adopt the IFRS. IFRS would become applicable in the country. Now convergence, it means that we will be developing our own high quality accounting standards which are going to be compatible with the IFRS. We are going to develop our own compatible accounting standards which are going to be totally compatible with IFRS. Now the Government of India, in consultation with the Institute of Chartered Accountants of India, it decided to go for the convergence approach. We did not go for complete adoption. We went for the convergence approach. We developed our own accounting standards and they are referred to as the Ind AS. So earlier we had AS, but now we have moved on to Ind AS. We are gradually moving towards Ind AS. The big companies, they are already following the Ind AS, and gradually our target is to move everyone to the regime of the Ind AS. So they are very much similar to IFRS. They are IFRS compatible, but still there are some points on which Ind AS and IFRS, they are going to differ on a very small particular point. So there are a few carve-outs which are there, a few carve-ins which are there, a small number of issues are there, but broadly the Ind AS, they are compatible with the IFRS. So what are Ind AS? The Ind AS, they are IFRS converged standards which are issued by the central government under the supervision and control of the accounting standard of ICAI and in consultation with the National Financial Reporting Authority. National Financial Reporting Authority has also recommended these standards to the Ministry of Corporate Affairs so that the companies, they can follow it. And the Ministry of Corporate Affairs, it came up with this notification on 16th Feb 2015 that Ind AS, they are to be implemented on voluntary basis from 1st April 2015 and from mandatorily they have to be adopted from 1st of April 2016. So for the big listed companies, the Ind AS, they became mandatory, and there was a separate roadmap for implementation of Ind AS in the banking companies, insurance companies, and NBFCs. So here is a list of the Ind AS that we are having. So there is an Ind AS 1 which deals with presentation of financial statements, and there is again Ind AS 101 which deals with first time adoption of the Indian accounting standards. And again, there are different Ind AS as we had different accounting standards. So there is an Ind AS for inventory, for cash flow statement, for income taxes, for fixed assets, property, plant and equipment, for revenue. So these are the different sets of Ind AS which are there. So now we can easily answer this question that the Government of India in consultation with ICAI decided to go for convergence with IFRS issued by IASB. We did not go for adoption, we went for convergence. So this is something you should remember. So let's move on to the next question. The question is, which of the following benefits would result on account of the convergence of Indian accounting standards with IFRS? Improved investor confidence, comparability across industries, facilitate listing of Indian companies to international stock exchanges, all of the above or none of the above. Now we have already discussed about the accounting standards and Indian accounting standards, that is Ind AS. So now I would want you guys to answer this particular question. It's very easy to answer this one if you have understood the concept really well. So now these are the benefits which would accrue as a result of convergence with IFRS. So if we converge our accounting standards with IFRS and we formulate as a result Ind AS, so these are the benefits which we are going to have. The investor confidence is going to increase. Okay, across the world, the investors, they are going to be able to study the Indian financial statements because they are now going to be at par with international accounting standards. Now this would also improve the comparison part. You can easily compare across the countries as well, across the globe as well. You can compare Indian companies' financial statements with a European company's financial statement, with an American company's financial statements. Also, group consolidation is going to be easy. Now there are different companies which have different subsidiaries spread across the world. They have one company set up in India, one in Africa, one in Europe, one in America. So for these sets of companies, the consolidation is going to be very easy. Earlier, at the time of consolidation, when they were consolidating all the financials together, there used to be a problem because different companies, they were following different accounting standards as per the country in which they are working. Now, if the company it is working in India, this would be following the international accounting standards only. So now the consolidation part is going to become easier. Also, now the Indian financial statements, since they are as per the international accounting standards, so now these statements, they are also going to be acceptable by the stock exchanges across the globe. So if an Indian company is thinking of listing its stock on any international stock exchange, this would also become easier. So these are the benefits of the convergence with IFRS. So clearly the answer to this question is going to be option number D, all of the above. So thank you friends, this was our very short discussion with regard to the concept of accounting standards. So we have understood what are accounting standards, how they were formulated, why do we need them, and how we have now converged these accounting standards with IFRS, and now we have come up with the Ind AS, and gradually India is moving towards Ind AS only. So this was the today's discussion. Thank you, bye bye, take care, all the best.